evening, everyone, and welcome to The Money Show. I'm Avan Dubash. This is the only show of its kind where we get you top personal finance and tax experts to answer all your financial queries. Do remember that we're going live, so if you have any queries right now, you can feel free to dial in to the number that should be flashing at the top and the bottom of your screens. Alternatively, just email us on themoneyshow@etnow.tv. That's themoneyshow@etnow.tv, and we promise to get your questions answered. Well, today we'll be focusing on all your tax-related queries, and we have with us Prakash Kotadia, partner BDO, who's joining in right in our studios. Well, great to have you on board. Thanks so much for taking time out and joining in. Well, can't help but talk about the big budget fine print, because it did bring quite a bit of cheer for middle class as well in terms of the overall tax announcements. So why don't you start off by breaking it down for us in terms of what exactly were the key announcements and what this means for investors saving?
Hi, good evening. As everybody knows that now election is due, so as such this was not a full-fledged budget, but it's more like a interim budget, or rather vote on account. But in this interim budget also, Finance Minister has attempted to give some relief to individual taxpayer. One of the major relief is increase in the tax rebate, which was available up to rupees 2,500, which has now been increased to 12,500. Although there is some confusion prevailing among people that up to 5 lakh rupees now there is no tax. It's not like that. Up to 5 lakh rupees, if income is there, then tax up to 12,500 you can get the rebate. But still tax rate remains same for income between 2,50,000 to 5 lakh rupees. So the moment your income crosses, taxable income crosses 5 lakh rupees, then you don't get 12,500 rebate. That rebate is available only if your taxable income is less than 5 lakh rupees. But still rebate increase from 2,500 to 12,500 is really a great relief to many taxpayer, and especially to salaried class. Also for salaried class, one more relief is there. Standard deduction, which was introduced last year, which was 40,000 per year, that has been now increased to 50,000. With this, both the amendment, and if somebody really plans his taxation well and claim whatever deductions are available under various sections like section 80C, 80CCD, 80D, 80TTA, and interest deduction for housing loan, etc., then it is possible that salaried person earning up to 1 million also may not require to pay any tax. So this is, we can say that even millionaire salaried guy is out of tax net now.
Okay. There was quite a bit of relief as well when it comes to real estate for home buyers, particularly on that no tax coming in for the notional rent for the second self-occupied home. Can you just give us a sense as to what exactly are the positives and how, investors can essentially benefit?
Till date, what was there, that if you are owning more than one house, and both are utilized for your self-occupation, then in that case, even though you are not earning any income from both the house because you are utilizing it for your self-occupation, but still you have to choose one as a self-occupied house property, and on other house, without even earning any income, you are required to pay notional tax on that. So this is a great relief for people who are having more than one house. So now up to 2 houses, if you are using it for your own purpose, then you are not required to pay any tax even on the second house. Although the interest deduction, which was allowed up to 2 lakh rupees from house property income, that continue to remain 2 lakh rupees. So even if both the house taken together, interest deduction will remain only 2 lakh rupees. One downside of this is there, that if you have more than one house, and for the second house, if you have taken a loan, which was earlier you were able to claim as a deduction, but now since second house is no longer liable to tax, so that interest deduction will not be available on the second house. But still, this is a great relief to people owning more than one residential house.
All right, indeed it is, and we'll be taking on board all your questions and queries as well. Do remember to reach out to us. There's a number that's flashing on the top of your screens. I'm sure you want to know about how you can better save your tax, what the budget means for you, the individual taxpayer. Do you have any other questions or queries that you would like answered? Well, we do have with us Mr. Prakash Kotadia, who is with us on the show today. Well, let's get on board. Our first question from Rohit Mehta. He asks, is the money spent on furnishing a new house capitalized in a way that 2 years after the property is sold, this expense can be treated as the cost of acquisition indexed and then capital gains can be computed? If yes, what is the documentation that is required? So let's understand what exactly the tax implications are. He's talking about furnishing a new house.
First of all, we should understand that what is considered as a capital asset. So whatever items are there which are of a personal effect, like furniture, fixture, then that is not considered as a capital asset, and as such any expenditure incurred on that will be expensed out rather than it will be capitalized as a capital asset. So if it's a pure furniture fixture, then no deduction will be available for that. But here I would like to add that if your expense is incurred for the house, which is really improving the life of the house or enhancing its value, then that will be considered as an improvement cost of the house. And if improvement cost is incurred 2 years prior to the sale, then certainly that will be eligible for deduction with indexation on the same. So we need to exactly see that what type of expenditure you have incurred. From your query, it looks like that it is a furniture. Then on that certainly deduction cannot be claimed.
All right, and what about documentation?
Yeah, if we are claiming that whatever, because there is a very thin line between what the expenditure is enhancing or improving my cost of the house. So for that you require, if you are claiming that it's not a normal personal effect item or a furniture, but it's a fixed in nature and it is improving cost of my house, then you need to maintain and keep all the documents with you, which will be come to your rescue when questions have been asked during the course of income tax assessment.
Okay, I hope we got your question answered, Rohit. And do remember, you also can reach out to us by emailing us on themoneyshow@etnow.tv or simply dialing in. There's a number flashing at the top of your screens. Well, Vishnu is with us. He joins in from Kerala with a query. And good evening, Vishnu. Welcome to the Money Show. What's your question?
Hello, sir, and hello, Subhash. Actually, the thing is that I have invested the money in the NPS. Sir, I have actually a tax query on that issue. Suppose, can we withdraw the money at the age of 55? Because I think that from 60 to 55, the maximum doubling will be happening. So if you had taken the money at 65, and will there be tax on the 50% amount that's taken from the bulk amount?
What age did you say withdraw at?
65. Actually, it's saying that 60 is the maximum time for up to investment. And suppose, is there any option? I don't know if there is an option. Can we opt to take it at 65?
Okay. Mr. Kotadia?
I am not very clear. Are you asking that after the age of 65, if you withdraw from NPS, then whether it will be taxable or not? That's what your question?
Sir. Actually, there is a 60% out of the total bulk amount, 50% we can withdraw. So I am asking that is there any tax on it? And suppose if there is no tax, what's the best way of investing? And suppose, and is there any option in which, and I am 42 now, and
okay, let's just break it down. If you could explain with respect to investment in NPS, what exactly is the tax treatment, what is the adequate withdrawal, and if you understood his question, if you could help him out.
Yeah. So for other than the government employee, up to last year, withdrawal from NPS was not, commuting withdrawal was not permissible, which last year amendment was made under NPS scheme, and now other than a state and central government employee can withdraw partially that money. and when this money is withdrawn at the retirement of time, then it will be not liable to tax. Whatever amount you are withdrawing, and 50% you are allowed to withdraw at that time, and balance 50% you will receive as a pension income.
All right, there you have it. I hope we were able to answer your question. Maybe you can email us if you have a specific query in mind. Ganesh is with us on the phone line. Hi Ganesh, what's your question?
For the current financial year, if I have a tax long-term capital gains on equity and equity mutual fund of rupees 1,20,000, and there is a long-term capital loss on the same equity and equity mutual fund of 40,000. With the current provision, out of 1,20,000, can 1 lakh be adjusted for the exemption, and then balance 20,000, can it be adjusted for the loss, and the remaining amount, can I utilize it for some other long-term capital gains on debt funds?
So this is with respect to LTCG, mutual funds and his investments. Can he adjust for that?
Yeah. Long-term capital loss can be adjusted only against long-term capital gain. I believe in your case, you have a long-term capital gain of 1,20,000 and long-term capital loss of 40,000. So certainly it can be adjusted and it will be 80,000. And again, long-term capital gain from equity and equity-oriented mutual fund up to 1 lakh rupees, there is no tax. So it will be tax exempt in your hand.
There you have it. That's the overall implications when it comes to the long-term capital loss. Meantime, we have another live caller. Do feel free. If you have questions, this is your chance to get them answered. Tax-related questions being answered by Prakash Kotadia. We have Robin from Bengaluru with us on the phone line. Good evening, Robin. Hi, what's your question?
Hi, this is Robin. I'm from Bangalore. I'm a rookie when it comes to financial matters. So please forgive me if I ask a simple question.
We are here to help. We're happy to help. Please, no question.
Thank you so much.
Okay, go ahead.
All right. So I'm a private sector employee and my annual salary is 21 lakhs per annum. I just heard the experts say that if a millionaire plans his finances properly, he might not have to pay the tax at all. So I was wondering, how do I do that?
Yeah, what I mentioned is that presently if anybody is earning salary income up to 1 million, then he can remain out of the tax bracket. So for that, whatever deductions are available to individual, that all he should claim. The major will be 2 lakh rupees interest deduction on housing loan. Then you have a 1,50,000 deduction available under section 80C for contribution to life insurance premium, PPF, etc. 50,000 is available for contribution to NPS. Then you have a mediclaim. Then you have a deduction available for bank interest. If you have paid any donation during the year, then that is also eligible for deduction. So if you are taking all this deduction, and a salaried employee get a 50,000 standard deduction. So if all these deductions are taken, then your 1 billion, 10 lakh rupees income becomes 5 lakh, and up to 5 lakh rupees, now there is no tax because you get a 12,500 rupees rebate on that. But since your income is 21 lakh rupees, so first of all, your taxable income will always remain above 5 lakh. So even that 12,500 rebate also you are not entitled. So certainly you will not remain out of the tax bracket, but still by claiming this all deduction, you can reduce your tax liability substantially.
All right, I hope we got your question answered, how you can reduce your tax liabilities substantially. And do remember, we're trying to take on board as many questions and queries as we can. But you can also email us your tax-related queries on the Money Show at etnow.tv. Every Tuesday is our tax special. Quick break. Be back with more.
Complete your TV viewing experience with the best of Hollywood entertainment and news. Get the Times Movies and News Pack at just 13 rupees. Ask your cable or DTH provider now.
Welcome back. This is the Money Show and we're answering all your tax-related questions. Being a Tuesday, there were a lot of announcements in the budget. What are the tax implications for you? How can you better save tax? Well, Prakash Kotadia is partner BDO and he's with us in our studios answering your queries. Well, we're getting quite a few phone calls, but we also had some email queries on our email ID, themoneyshow@etnow.tv. Our next one is from Mr. Rajneesh Kumar. He says, I'm a government employee and my parents are dependent on my income. My company takes care of all my medical expenses for my parents and me when I reimburse my bills. But now he asks, can I claim these reimbursed amount for tax benefit under Section 80D? And if so, what is the limit? So, we are very accustomed to reimbursing our bills, but can that be claimed for tax benefit? Can you just give more details to Mr. Kumar?
Surely not, because you have not incurred expenses. Your employer has reimbursed you.
Yeah.
Then how you can claim deduction for that? If you incur out of your income, then only you will be able to claim deduction. But you are lucky that your employer is bearing all cost.
Yeah, can you just also give more details in terms of, medical spends, if you can claim it, if they are incurred and not reimbursed for an age limit of up to 60 years, what exactly is the tax implication there?
Yeah, so this deduction falls under Section 80D, where the mediclaim deduction is available. So up to the age of 60, you can claim 25,000 as a deduction towards mediclaim premium. But if you are not paying any mediclaim premium, then in that case, whatever expenditure incurred towards medical cost, up to 50,000, you can claim that deduction. And in case of senior citizen, that is above 60 years of age, instead of mediclaim premium being 25,000, there again you get a deduction of 50,000. But subject to that, either you get mediclaim premium of 50,000, and if you are not paying any premium, then in that case, up to 50,000 rupees, you can claim medical expenses as a deduction.
All right, I hope we got a little more clarity, and of course you have not incurred those investments or that sum, the expenditure. It's been reimbursed by your employer and therefore cannot be claimed as a tax benefit. I hope we answered your question. Do remember, we have with us Mr. Prakash Kotadia. If you have any tax related questions and you want a little more clarity, please feel free to dial in. There's a number that's flashing at the top of your screens. What is the tax relief in the budget? What happens to your taxes? How do you reduce your tax outgo? What is the impact for the property owners as well? We're answering all that. And do remember our email ID. It's themoneyshow@etnow.tv. Well, let's move right on. We have another question emailed to us from Mr. Bhagwan Hatiramani. He says, my elder daughter is planning to buy a property worth 40 lakh rupees on loan from HDFC Bank for 20 years, but she wants to put her younger sister's name first and hers second on the agreement. Will she be able to take a tax rebate on the same? Can the property be held jointly by both the children? And can both of them file returns for the same? So a number of questions. First, let's understand about the putting the second daughter's name first, the tax implications, the deduction, and whether this property can be held jointly.
It is permissible to have a second joint co-applicant as your sister, so there is no issue in that. If in the purchase document it is not clarified that who is owning how much percentage, then it is assumed to be, in case of two co-owners, 50-50%. In case of more than two co-owners, it is considered as equally owning. So far as claiming deduction is concerned, everybody can claim deduction to their share of ownership. So even whatever loan is taken, that also can be divided in the same share on which you are owning the property, and interest deduction can be claimed by both the children.
All right, there you have it. That's a lot of clarity coming in. Both of them will be treated as the co-owners with this property, and both of them need to file their income tax returns, and they can claim the tax benefit accordingly. Well, on that note, I'm afraid we're completely out of time, so we'll wind it up on the show. Thank you so much, Mr. Kotadia, for joining us and, of course, clarifying a lot of doubts from our viewers. Do remember, you can still keep your questions coming on The Money Show at etnow.tv. Thanks for watching.